This is Carl with the three things I'm watching for Friday, April the 4th. Starting out, in my opinion, this was overlooked in the stocks and acreage report from Monday, and it's been a little bit of a busy week. We haven't really touched on this, but the total U.S. acreage, um, 9.5 million acres lost since 2023. Our plantings are expected to be down 9.5 million acres on all crops across the entire United States. That's including corn, soybeans, wheat, hay, you name it. It's all in there. But the thing is, we've lost 9.5 million acres in 2 years. That's a little bit concerning. Urban sprawl is taking a lot of our acres. And we've seen some go back into pasture and stuff and some set aside, but that's a lot of acres to be losing. And if that is a trend that continues, it's going to start to get a little bit more noticed in the market. The second story I'm kind of watching a little bit here today, and it really didn't get much attention, and maybe it's nothing, but I feel like it's something. China and Brazil are working to put the groundwork together to export DDGs, corn-based DDGs from Brazil into China. Not maybe it's not a big deal, but if China starts ramping up their DDG imports from Brazil, and Brazil is looking at heavy expansion into corn-based ethanol production, you got to ask yourself how much meal demand is China looking at offsetting there, and is this something that could further cut into meal imports out of the U.S. and Argentina? So a little bit of a development there that kind of surprising, but maybe nothing. The final thing I want to really focus on today, and it's not just today's session, but yesterday's tariffs I feel changed the entire mindset of what the market is going to be going forward, and that's the export market. Some of these countries, and I'm going to use like Australia and Colombia, for example, and there's some others who didn't have, they've never had a tariff on the United States, but yesterday they got a 10% blanket charge. And these have been, Colombia is a consistent corn buyer from the United States. Australia, we've done some trade with them, but the thing is, by putting a 10% tariff on, you've started to, now some of these countries are questioning the ability to even want to do business with the U.S. I think we've dampened our future trade relations. We haven't strengthened them by any means, and some of our traditional clients that we have for exports, we really, for lack of a better term, offended. I don't know how else to put it, but a 10% tariff when they have never charged us anything is not a good move, and it just economically puts us behind the eight ball. We're trying to expand our markets, and this was a way of bottom line kind of contracting them a little bit. Not really what we wanted going forward. And the thing is, maybe the tariffs will turn out good. Maybe they won't. We don't know. We don't know what's going to happen. But the uncertainty is driving away some business, especially the managed money crowd. So a little bit of a mindset change after the tariffs. It wasn't just on trade routes, but trade relations. Quite a bit of them have been affected by these as well. Those are the things I'm watching today.